Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, January 13, 2025. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? They want you to believe it's a reversal day. That's going to be the subject of our discussion in the early going in this particular episode. She gapped lower this morning, reversed, and finished on the highs of day, give or take. That is one of the characteristics, or a couple of the characteristics of when they do put in a low, but they're missing one important component: institutional participation. The total volume today wasn't that much. It was a little over 42 million shares traded in the SPY. Might settle out a little more than that by the time this video is over. But that's not NOT, institutional participation. Doesn't mean it can't be a low, but it's one of the characteristics we look at for when it is a good low. So what are we looking for a low? What number was I looking for? Well, we started talking about this last week. Let's go over it again. So A number one, we have a bout of market symmetry. So if you take this measurement here, and then you go to the new high, and you take an equidistant move to the downside, you come out somewhere around 574.32, I believe. Market symmetry is taught in the class MSF Masterclass. One of among many things taught in the class. By the way, this was also right from the course, right from the class, the masterclass. This was part of the forecast. This down leg was part of the 2025 forecast that was laid out in the cycles module, wasn't it? It's all about time. Time is more important than price. Check the video recording. So we have a piece of information from market symmetry that takes us down to about 574.32. Fair enough. Let's see what Mr. or Mrs. Magic Calculator has to say. Let's take the pivot high of 609.07. We come over to the calculator. We put in 609.07. We hit calculate, and we have a number down here of 572.61. Now, we spiked through this one already and finished above it today. But the next number down in the sequence is 572.61. So we put 572.61 on the board. We had symmetry that was a touch higher, and we have a breakup candle low coming in at 570.52. That's a touch lower. So the magic calculator number is in between a breakup candle low and the conclusion of market symmetry off from the high. Pretty interesting information. I would call this a pretty good zone down there. Remember this one? This was the title or thumbnail from the video on Thursday night, Gap Down Friday. We did, in fact, have a gap down on Friday. This is Friday, January 10. The close the day before was up here. Gap down Friday, gap down Monday, recovery, close above Friday's low. That is solid information for the bull case. Close above Friday's close is even better for the bull case. We just didn't have institutional participation to say it was a decent low. You really need that component, in my humble opinion. What about inside the numbers today? Let's take a look and see what happened over there. Wake up to a gap down situation. Overnight crew was killing the tape. We'll start with today's early pivot of 580, where she either remains bearish or turns back to the bull case. 580. Let's just go see that one first. Right of the vertical is today's activity. You could see 580 was in fact important today. That was our early pivot, but wait, there's more. Below the pivot, the next number down in the sequence is 576.70. Let's see what was going on with that one. We had traders on the long side from 576.70. We were saying, and you'll see this in the notes if you take the time to pause the video and double check the work. But what you'll see repeated in here many, many times is, as long as they're above 576.70, The downside is off the table, and they're going to reach 580. Opens the door to the pivot at 580. That was still already early this morning, above 576.70. It could take all day, but that opens the door up to the pivot. And it's repeated in here over and over and over. I probably said it 15 or 20 times to the live room this morning. We get a little granular. There's numbers along the way. However, above 576.70 was the bull-er case. You'll remember that from early this morning. That was the bull-er case for the pivot, which became the bull pivot later in the morning session at 580. Above 580.55, the door opens for 582.60, which they were headed for late in the day, but they ran out of time on the clock. Remember, pause the video, read the notes, go back to the chart to double check the work. What about stocks on the move? We had Amazon, NVIDIA, Palantir, and Edward Life Sciences today. Guess what? Only NVIDIA hit its number. Let's go take a look at the NVIDIA chart. 129.70 was the number in NVIDIA. It opened above it, came down to run a test of it, and within 10 minutes took off for a rocket ride for the rest of the day. NVIDIA, stocks on the move. What about the table of important numbers? Take a snapshot, put some lines on your chart, double check the work. Let's check on IWM. Support number 214. IWM, 214. How you doing? Almost on the button. Low of day was 213.97. They tried it in the opening 5-minute candle, came back for another try about 10 or 15 minutes later, and that was the last try they needed. Did we have participants in the live trading room? We did. On their own, they were watching the numbers. They saw the number on the board. Interested in the IWM, we have something for everybody. We have Q traders, we have NQ traders, we have IWM, we have RUT traders, we have ES traders, we have stock traders, we have bond traders, we have commodity traders, we have traders from all walks of life, and everybody does what they're comfortable doing, which is why we put a whole host of numbers up on the board each and every day. We have something for everybody inside the numbers. Taking another look at the IWM, or Camp IWM, better known as, from a daily chart perspective. And once again, the reversal day from a candle perspective, but not the institutional participation on the volume like you see here, like you even see over here, not even close down here today. So I'm a little weary about this bounce. That's a technical term. By the way, a little sidetrack. You got to see this one. Lockheed Martin. This was one of the lazy swing trader automagical algo system trades at 467.10. This is what it looks like from an hourly chart. So the entry was 467.10, and then all of a sudden today, Monday, you get the pop, and the exit was 484.65. High of day was 484.82, and the pullback, and we'll issue that one a funny how that works. How do you do that? And by the way, now the thing is a risk-free, emotionless trade. We put the base hit in our pocket. We have more exits along the way. That's the way it's done. We're not going to let the remaining portion of the position go bad on us. It's a risk-free, emotionless trade. Lockheed Martin. Entry last week. What about the folks down at the transportation department? What do we have going on there? Well, same routine as many of the other markets. Look at the big picture, and we still have a bearish, wedgish, flaggish situation going on. Nothing has changed as they use today to bounce up near the 20-period moving average, trying to recapture said moving average, riding the 200-period moving average down here. Spiked through it early today, finished on the highs. The look is a positive day, but there's been no material change on the chart, and there won't be until she breaks the chain. How does she break the chain? By eclipsing 16,243.71. That'll ensue a test of a breakdown candle high area around 16,450, 16,500, and that will essentially begin to break the chain of the bearish, wedgish, flaggish situation. Q people, how about a little bit of a different look on the chart? Did not get back inside Friday's closing print, so that's of note. Puzzle piece, we'll put it on the table. We talked about this area last week down here around 494. There's the symmetrical, the perfect symmetry number is at 494.48. Call it 50 for argument's sake. From a big picture perspective, that's not a lot different than a spike below 494, where we've got a line at 493.71, comes from a different place. Lot going on down there, 494, give or take. Write that down, put it on a sticky note. Financials catching a bid today in terms of the XLF. Everything caught a bid today, finished near the highs of day. Again, the look is a reversal day. I'm suspicious. And guess what? As long as Smash Mouth is below this triangle pattern, that's bad news. This was a false breakout. They recaptured it on the downside right away. Here we are with the same type of day everything else had. However, nowhere near Friday's close just yet. Still finished down 1%. The spiders finished up slightly. The Qs finished down 1/3 of 1%. But semis were down more. Pretty good proxy for the tech space as a whole. I would watch the semi space. They really have to recapture this triangle to make anything happen. This is a false breakout situation. Look at the weekly chart. Forget the daily chart. They tried to break out. They closed back right on top of the lower trend line last week and opened below it this week. They have this week to recapture it. That's it. And that's a pretty good place to give it a wrap today. We're going to pull the ripcord here. I'm David Frost. I appreciate you very much. Without you, these videos are not possible. And I thank you once again for tuning in to another episode of Common Sense Market Analysis.